Most traders lose money, not because they have a bad strategy or they didn't study enough, but it's because they never gave sufficient time to test that strategy out over a few weeks or a few months. You have to ask yourself, what did your strategy do over the last 100 trades? Did you follow your plan? Or did you bail those trades early due to emotion? Changing your mindset and looking at your trades over the last 100 trades can take you from being a losing trader to being consistently profitable. Today I'm going to be talking about my trading strategy that I've worked on for the past 3 years and that has completely transformed my trading and my consistency. I mainly trade this strategy between 9:30 in the morning and 11 a.m. Eastern. There's no more guessing or flip-flopping between strategies. Every day I come with the same plan. There's no more gambling and there's no more not knowing how to approach the markets every single day. And I want to simplify that for you in this video. Again, I want to state trading isn't easy. It took me a long time to get to this place. It took a lot of grinding every single morning watching these candlesticks. But if you give yourself enough time and consistency and you dedicate yourself to it, you can do it too, because it's a simple, repeatable system and it's very possible that you can do it too, 100%, okay? So let's get started. All right, so every single morning, market opens. I already have all my levels drawn out and I know exactly what I'm looking for, okay? So that's gonna be the previous day low and the previous day high zone. Those are the two main zones that I watch every single morning. Along with that, I watch the pre-market high and the pre-market low. Okay, this is the blue dotted line for the high and the blue dotted line for the low, and the previous day low, previous day high. So first rule I have is I never trade within the pre-market range. I always wait for price to break above or below the pre-market range because it's notoriously choppy within this range. Okay, so what I like to do is I always give it at least 15 minutes after market opens to tell me if the market's going to be choppy or if the market's going to be strong. Okay, and this rule saved me on Friday because as you can see, like the first 15-minute candle was chop. The doji just means chop. Sellers try to bring it down, buyers try to bring it up, and it just consolidated in the middle. This told me to be hands off, okay? We want to see a clear break and close above the level to show true direction. So you can see how strong and decisive this candle was next, and it closed above our pre-market high. So that triggered for us a long entry, okay? So what I like to do is after I see the 15-minute close outside the level, I switch it on to a 2-minute so I can better dictate my entry, okay? So once that happened, you want to look for a nice retest of that zone and a long off that zone. For me personally, on Thursday, I actually missed this long, which was beautiful. But since I missed it, I had to be patient and wait for another retest. Okay, so after I missed this long, I patiently waited for the 13 EMA tap. And what I did was I got long on this 13 EMA tap. I went live on YouTube on Thursday and did it live. So it was a good one to review and see how I managed it. But I managed to make almost $1,400 in 5 minutes. So it was a great trade. So after we retested this 13 EMA, we came down and we started showing strength, which initiated my long. After that long position, I started scaling out, and this trade turned out to be a great trade. Now, literally every single day, I look for the exact same thing. I wait for a break and close over or below a level with the 15-minute, and then I switch it to a 2-minute for my entry. I usually like to enter off the level or the EMA. So if an EMA is at the level like it was here, that's an A+ trade, right? We scale for at least 1.5 R on our risk. So we risk, let's say, $1 to make at least $1.50. We take half our position off there. And then we let the rest ride to at least 2.5 R and slowly remove our position as it keeps going up to remove the risk from us losing. Because after we start removing some funds from our trade, it's going to be a risk-free trade, because after that, if we could just take it till break even, no matter what, we got the cash in our pocket. Okay, so every single day I look for that, whether it be the pre-market high or the pre-market low, or previous day low and previous day high. Those are going to be A+ trades once they confirm the break and retest from there. And again, following our system for the entry, that's how we scale and manage the trade every single day. Now, to recap, every single day we mark out our previous day low, our previous day high zones. We mark our pre-market high and our pre-market low. We wait for a 15-minute closure above or below those levels, and then we switch to a 2-minute for our entry either off the level or the 13 EMA. We want to see price controlled, slowing down and retesting our level, not in an aggressive way. And once price action shows a reaction at that level, we enter. Okay, this is not a guessing game and it's not a gamble. Every single day, this is a repeatable system that I take every morning. And you can do it too. I go live every single day at 9:45 a.m. Eastern, and I take these trades live. So if you want to join me, please get on those live streams. And if you want, you can get in the chat and we can chop it up every morning together. All right. Thank you for watching this video, guys, and I'll see you on the next one. Peace.